Hello and welcome to another episode of Casual Friday. This one is actually on Friday, so that's helpful. We've got a fun weekend ahead of us looking at the market. Before we get into it, as always, Technical Roundup is brought to you by WooX. Links available in the description below to check them out, sign up if you'd like, but more importantly, read the articles that I wrote because that makes me feel warm and fuzzy. The one I want to bring to your attention is one of the sub-articles in the main one in the video description, again about execution. There's a link to their execution dashboard, which I've shown before, where you can compare your cost of trading depending on the asset, the size. You can compare the fee methodology, all the major exchanges, and there are revamps coming to this as well. But also there's a nice article here about cost of trading, trade execution in general. We talk about slippage, we talk about fees, we talk about funding rates, and how all these things affect your net P&L. So even purely from educational purposes, go check it out. If you want to sign up, you get zero fee trading for, I think it's $100 deposited, and you can try it out for a couple of weeks and see if you like it. And if you do, tell us. If you don't, also tell us, and we can make real changes apart from just shitposting in the team Telegram. So with that out of the way, Don, let's get into it. Number has been going down. Why?
Because no one's buying this shit.
Who sold? I need to know who sold.
I actually think there's a larger seller in the market. Like there has been some odd behavior.
I'm sorry, you're like that Spider-Man meme who just like dumps all his coins he bought at 15k, and then he's like, there's a large seller in the market, you know, kind of pointing at himself. Or the Barack Obama like medal meme, just awarding it to yourself. Like, oh, I front ran the big seller, you know?
No, it's not me. But I feel like someone's been like pushing it down a little bit. It would have gone down anyway, but I think someone's been trying to get out of like some spot position. But I'm not the right person to ask. I'm just the chart monkey, but it feels and trades that way. And now, like today at least, like something that I've been watching is basically that Bitcoin's been like just mercilessly getting sold down while the S&P looked quite okay, right? Like the S&P the last few days been okay. The traditional market's been okay. But Bitcoin's been getting sold. And now that we're into the weekend, right, the S&P has actually been starting to struggle. So that's not really good for the bulls either. So we kind of have like this shitty situation for the bulls where one, you have crypto natives or one crypto native, who knows, selling, and then you have the S&P starting to sell off too, which is a little bit rough. But we'll talk about it in a bit.
Yeah, it's one of those, oh, if you think this is bad, wait until the S&P dump arguments you're making at the moment, which is fair enough. Let's talk about BTC. I don't think the monthly is worth doing the same shebang, apart from the monthly candle just looks worse. Yeah. You know, you can have all the candlestick gurus coming out in 19 days talking about some Maruzubu, Ichimoku, Yakimonji thing, and how that means it's going to 12k. Yep. And they tell you when it's already down 30% as well. That's my favorite part. It's like market dumps 30%. It's like, oh, that's a swing high, spinning top. It's like, fuck, really? Is it? Like,
yeah, they're always so late. Like the candlestick stuff is so late every time. One thing that I want to mention before I forget it, you can probably be like a little bit on the defensive side until Capo comes out of his hold again and starts tweeting on Twitter. At that point, you should probably be a little bit more cautious on the short side, or at least if you want to be bullish, that might be a time to like look to allocate.
But if he's right, Don, you know that yearly candle. I've been telling you, there's no wick on that thing.
I mean, there's just no universe in which Capo is right. Like if there was an Avengers movie.
Oh God.
Just doesn't. There's no universe in which he's right. Like you could go through all of them. There's just no universe.
I mean, thing is, like, I feel at this point it's so displaced from when he was loudest. Like him being right, you need to define those terms very carefully, because at this point it wouldn't really have any meaning, right?
Yes.
I just feel like when your idea just gets so far away from what you envisaged and when, and then if you come back around and claim clout for it after a significant deviation, that's being generous, from what you foresaw, then at some point it's just not very useful, right? It's like saying that you're super bullish and the market dumps like 30, 40, 50, 60% and everyone gets obliterated, and then it goes up afterwards, and then you say, well, look, it went up eventually, right? It's like the trend in general is up and to the right, and there are no rewards for like that type of for being that wrong over a specific time frame. I mean, essentially, I think a lot of his popularity came in at literally the bottom, sort of 15, 16K, sort of peak
Yes.
fear. And to be fair, we also see the same on the bull side, right? Like you have on-chain Miracle Kid accounts on the way up who just sort of run it up mega, and they become at their most popular at the Pico top. It's like a trend indicator, if anything. I just always feel bad. I know you and I diverge on this a little bit. I always feel bad kind of almost picking on him because he just happened to sort of blow up engagement-wise and become the spokesperson for this thing. But your compelling counter-argument that I saw on Twitter was like, well, these types of big accounts, they're not rational type of directional trades with invalidations. It's just pure fear-mongering that puts people in bad positions when you have that much influence. Is that like a fair summary of your view,
Yes.
or have you been thinking about this a lot?
No, that's pretty much exactly right. Like there's a difference between like, hey, I'm trying to trade this, and hey, I'm just like fueling the fire, basically, like sitting there being useless. Because like, I mean, if an asset class in general doubles and you're like, hey, I'm still spot short, I mean, how does that make any sense, right? If you're 1x short, you're fucked. Like the space doubled. So like, how does that make any sense? And I can tell you the moment we would go down, like if he's right, quote unquote, he will come out and be like, hey, I was so right. Everyone was wrong. And everyone should talk me. And I'm the big victim here, right? But there's no one that actually trades. Like this is impossible to trade that way. Like you cannot tell me that anyone trades crypto with 0.2% leverage. Just doesn't exist, right? Like it's just bullshit. So like the fact that one, it's just fear mongering, and two, it's not even true, right? Like you're basically fear mongering, telling people that you're short everything, and it's very apparent that that positioning doesn't exist. That's the worst combination I think you could do. It seems very, very dishonest and gets people in shitty positions where you're not even involved, right? Like if you're just pretending you have a position that you actually don't have. Um, it leaves me with a sour taste in my mouth. Especially in the case where you're like, hey, this asset class is down 80%. Let me fuel the fire, make everyone even more bearish. Like I don't understand what the point of all of that was.
Yeah,
Slash
and
is.
there was some like meandering nuances with it. It was like, well, I didn't short BTC, I was short like BNB and TRX, and then all these random ads. I just feel like he and the community as a large just got swept up in the celebrity nature of it, you know, where like the
Yeah.
cult of personality around one person used to sort of scapegoat one side of the market. It just became that. I don't know if I agree with you in terms of like, is he still going to be a useful signal going into the future? I mean, maybe thus far, I don't know what the sort of efficacy of that has been, but in general, I feel like, especially for our listeners, tend to be pretty intelligent, especially those who use our ref link. Sorry, I had to.
Wow.
I know that's so bad.
Wow.
It's okay. Our editor will delete that. No, we won't. We don't have one. But yeah, I just feel like most of our audience are sort of can think for themselves and generate their own trade ideas and that type of stuff. And I feel like most people who were sort of copy trading got burned hard enough to where at this point it's just an entertainment product to follow more so than I wonder what this serious thinker has in terms of a directional bias.
Yeah.
But it's already the fact that we spent sort of 5 minutes talking about him shows how prevalent he was in the zeitgeist, you know. And again,
Yeah.
it's no coincidence that when you get a mega trend one way, you're going to get some cult heroes come out at the extremities, and he was just the bear market version, and we had plenty of bull market versions, and we're going to have we're just going to have that going forward because everyone just loves the idea of there being just one dude who knows, and he will just give you the answers very definitively, you know.
Yeah,
And
scares the shit out of me every time. Like I see people like commenting like stuff like in that direction under my posts. I'm like, fuck my life. Like I don't want to be this person because it goes bad every time,
of
right? Like
course.
there is no okay, no person is always right in the market. You will have big losing streaks, and I mean I've had plenty. You've had plenty. Everyone's had plenty, right? Like everyone that's traded for a while, like
Not on
has.
Twitter.
Yes, like that's the thing, right? On Twitter, you can pretend you can just make 5 tweets and then just retweet the one that actually hits.
Thanks for playing. Yeah.
Yeah, but it's not. Or like you can even on Twitter, you can even post like, "Hey, I'm bearish," and then it goes up, and you're like, "By the way," like the next day, you're like, "By the way, I flipped overnight. Thanks for the money." And I'm like, cool.
You're welcome, I guess. Yeah. Yeah,
Yeah.
there's a lot of those. It's strange. That's why I sort of put out that tweet, which seemed a bit sort of soft and cringy about like it's okay to struggle and people losing streaks and mismanaging trades and oversizing. I just genuinely, like most days you scroll through Twitter, it's people just winning or pretending to win or claiming clout for stuff. And in terms of like the stuff I mentioned with losing streaks and mismanaging position, oversizing, cutting early, cutting break even before it goes to target, those are way, way, way more common than just massive winning streaks. But they maybe occupy less than 5% of Twitter commentary, right? It's like if you go on Twitter being like, I want to see what the average trading experience is like, you'll be beyond misled. Or maybe we just sucked on. Maybe it's that. Everyone else is just a prodigy and we haven't cracked it yet. So monthly, yeah, we're going to wait for the candlestick confirmation pattern chads to tell us the Japanese name for whatever the fuck this is. But bigger picture, I think we just keep going back to the fact that the big levels are below us, the big levels are above us. The ones below us are looking slightly more likely if this keeps going. But that's sort of it. We'll solve that problem when we get there, I think.
Yeah, I mean anything between 20 and 23k on the monthly looks really solid support, and resistance wise it's a little bit higher up, but I don't like the resistance as much as I like the support. So
yeah. Well, that helps in crypto, I think. And also, just to kind of summarize, correct me if I'm wrong, to summarize the higher time frame argument you're making on stream is basically that there's a very, like, you like the odds of 16k, 15k being the bottom. So now the name of the game is buy as close as you can to that. And the decent formula for that is around 20k-ish, because that's both monthly support and gives you the closest proximity to invalidation. Is that fair?
Yeah, I mean, it gets so, like, I could see a wick to 18k or something, but like going all the way back down to 15.5 is actually, even on a wick basis, this seems so unlikely to me. I'd be very surprised if it happens. I mean, I've been surprised by price action before, but that one would be a shocker to me. Like, doesn't seem like, I don't know what would have to happen to make that happen. Like, I cannot even think of something.
Look, Don, if you're not going to give me the yearly wick, you could at least give me the weekly one, because I famously made a pseudo bear post before the 24k breakout when I looked at that 20k wick, and I just thought on the weekly time frame there's a decent chance that wick gets backfilled, because those weekly wicks almost always, at least usually a bit more quickly, but they get backfilled a lot, right?
Yes.
And so I was making that 4 a.m. can't sleep bear post literally before the market broke up to 28k and that huge breakout candle. So if you're not going to give me the yearly wick, which I can understand, you can at least give me the 20 something wick, right? Just to save my decency, whatever's left of it.
I'm so down with that one, actually. Like,
okay, yeah. It's just a retest, bro. You know, the entire market's melting down and you just kind of tweet, it's just a retest. I love people who do that. It's like my favorite type of shit posting. It's so satisfying. Speaking of satisfying, the weekly time frame, it's nice that it's back, because for a while it wasn't the best and we had to deal with daily ranges, etc. I must say I'm still disappointed that the tiny green candle box had that much of an impact versus the more established gentleman at 32.3. But at this point, it's hard to ignore, right? That's the level. Is this your Euro FUD coming up?
Yes, I was
fucking knew it. I fucking knew it.
I was just about to say, like, you just check the Euro chart if you want your levels to hit. Yeah, I mean, we front ran resistance into something that I think happens quite often in crypto. Like, it doesn't give you the clean entry or the clean exit. It usually gives you either, like, when you have a really good level and you hit it, it gives you the level below that level. And you're like, why the fuck did it go down so low? And the shitty level, like, lower actually stops it. And the same, like, with upside, like, if it actually hits the good level, it's gonna go higher. Otherwise it'll probably reverse before ever hitting it. In my mind, like, the reason why this happens, especially on the downside, is that a bunch of people buy the good level, right? A bunch of high time frame guys buy the good level, but also a bunch of degens just buy the good levels on leverage, and then they get washed out. And the level below it is basically where, like, only a few get an entry. Like, there's not that much size there. So the high time frame guys are happy because they got a decent entry. The low time frame kind of shark people get an entry off of people that bought the high time frame level but with too much leverage, and the people with too much leverage, just get nothing as usual. And the reason why I think we don't hit the high time frame resistances, like why we reverse oftentimes before they hit, is just because people try to kind of like milk it into those kind of levels and like, this must hit, and then they increase their leverage because they're like, this is such a sure thing, like 30k to 32k, like that's a 2k rally, but if I lever up, that's such a good play, and it just doesn't happen. And at that point, you shoot past it and the people buy 30 and sell 32 and then it goes to 38, or you just completely wipe everyone out, and that's what happened this time around. The level, like the shitty kind of cluster on the left side did its job, and the high time frame level never got hit. So
one green candle boy versus army of PhD quants, classic type of scenario. I agree with that. It also brings to mind a funny example, and you've seen this before on Twitter. I'm sure we've even talked about it on the show. The dumbest thing in trading, which is like, I'll scalp it to my target, which is kind of what you're talking about as well, where someone's like, 30k is mega bearish resistance. I'm so bearish, I think it's going to 10k, but the market's at 29.4, so I'm just going to long, and then I'll close my long and flip short, because that's how Twitter trading works, right? You're never actually wrong. You just flip and make your money back, which is why all of crypto Twitter's on the Forbes list for that exact reason. But yeah, that type of trade logic happens a lot. People have like a really good level to do business, but they're impatient. Like, what can I do to kill the time? I'll just like counter trade the direction of that level to catch 0.5% of the move, with my expected move being 20%. And it sounds ridiculous maybe to our audience, but I've seen that so much, where people just start gambling in front of the areas where they actually want to do business, and actually in the opposite direction. Like, I'm so sure I want to short 30k, for example, and I'm sure it's going to get there. The market's at 29.4. There's $600 there, and at 100x or 1000x, depending on your venue, there's a move to be had there. And then they end up fucking up that trade, and also just missing the actual move they planned for. It's a bit of a disaster type of trade. I've never seen it go well, honestly.
Oh yeah, it never does. And I see this actually like every day in my comments nowadays. Like, people like, hey, this is gonna go, like, we just broke the daily structure, but I think it's gonna bounce to 27 or 27.5, so I'm long, and then I'm gonna short 27.5 down to 18 or whatever. And I'm like, if you're that bearish, why the fuck like, why the fuck do you insist on the first leg, right? This is the exact same as the people that are like, Bitcoin is so bullish here, it's gonna go from 10k to 60k, but let me short from 10k to 9, because it needs to retrace first. And it's like, are you on crack? Like, like, what are you doing? Like, if you're so sure that it's gonna go to 60k, you should be much more worried about getting your entry right, like actually getting an entry, than catching that 1k wick to the downside that may or may not happen. Like, it's completely insane, and this is something I see all the time. Like, people are just like, they need to get every move right, otherwise they will not trade it. And it's hysterical to me. Like, it makes zero sense.
It is crazy. One of the more absurd examples of that I remember seeing is someone, and there was like some P&L screenshot to go with it, and it was hilarious because the market had just broken. It broke out of 20k, and it was trending up sort of through 20, 30, etc. And it was at like 29, 30k at that point the first time round, and that guy was like, I knew this was going to be really bullish, but I shorted because it didn't confirm 20k as broken resistance turn support. I'm like, oh my god, you have gone quite wrong, my friend. In that case,
maybe he held all the way till 15k and close to profit.
Yes, he definitely did that. I'm sure that's how that trade works. I guess the lesson there overall is just like trade your levels and don't try to get too fancy when the market tempts you by taking bad trades ahead of them, right?
Yeah,
I mean, ahead of them, not insofar as the wick thing you spoke about, but just like having the patience to have a directional bias and do business in the areas where you want to do business, and there's going to be a lot of noise and nonsense in between, and you don't have to fall victim to it, because if you do, not only are you likely to lose that trade, but you're likely to lose out on your larger idea as a whole, and then that's lose.
I mean, the thing is, and this is how I trade, if I'm bullish, I exclusively look for bull setups.
You can't do that, Don.
And if I'm bearish, I just look for the bear setups. Like, it's literally that simple. Like, if you try to be too fancy, right? I mean, there's a reason, or at least there should be a reason why you're bullish or why you're bearish, right? So if you kind of identify those reasons, trading that direction should be easier, right? Like, by definition, like if you're in a bull market, for example, like the market's just been going up, just looking for the setup, like the bullish setup, is just 10 times more likely gonna yield you money over the one like, okay, I want to short the pullback or whatever. So it's just like, if you're bullish and if you have a bullish kind of narrative going, or like an idea in your head, like this is gonna go up, I mean, then just be bullish. Don't try to be too fancy. You don't need to catch every leg. You can
Yes, you do.
just yeah, on Twitter you have to.
On
Like,
Twitter, that's the thing. Twitter will tell you that there's always a trade, there's always a good level. The trade at that level is almost always 50-50. And if you're wrong, you can just trade your invalidation and make your money back.
yes,
And I
but
didn't
how it
think.
actually works is the moment you get invalidated, you flip, and then you get invalidated on that position as well, and then you're like, oh fuck, I was right the first time, and then you flip again,
Yes.
only to get invalidated again, and that's how your
Yeah,
portfolio
that's
goes
just
away.
because you're not very good at this, Don. All the pros on Twitter do it differently, and so maybe you should spend more time browsing. Forget your family and other personal commitments. Just go on Twitter, and they'll teach you how to trade every single level of every single day in both directions.
On every single time
On
frame,
every single
of
time
course.
frame, dude. If you don't go into a new trading day with 12 trading plans, then you're not even trying, are you? Be prepared for anything, Don. Isn't that lesson number one? All the uncertainty in the market. No, but like on a more serious note, I do think there's been an erosion of useful sort of norms that we've had in trading, and directional bias being one of them.
Yes.
I just feel like that's gone. And while initially the whole if-then type of logic was net beneficial for like traders to be able to think in sort of probabilities and decision trees, as always, we just overshot the mark with that. Now, no one ever has an opinion about anything. No directional bias, no preferred levels. Every level is tradable. Every direction is tradable. Every move is tradable. And if you're wrong, you flip, and never take any risk. You mitigate, break even immediately. Like it's just take some risk,
I
I
mean,
think
you
I
have
think that's
to.
what it comes back down to.
Yeah, that's the job of a trader. You take risks. You take risks, but they have to be somewhat calculated. And then you either make money or lose money. But this whole like I never lose shit, there is no trader in the world that actually like makes money that way. Like you either you basically you you make your idea, like you think of a logic of your trade, you pick your direction, and then you trade that way. And if you invalidate it, you invalidate it, and that's it. And then you go into the next game or next trade, with a fresh mindset. Like this whole like this flipping stuff, right? Like I flip at this and this level. This works sometimes on high time frames, in my opinion, but the low time frame stuff, it's gonna get you in the worst kind of mindset possible, because low time frames. I mean, even if you're right, there can be a guy sitting there with 10,000 Bitcoin that hasn't done anything for the last 10 years, rediscovers his Bitcoin wallet, moves those coins, and the market disappears by $2,000, right? And you have your low time frame shit, and then you can retrofit anything on the chart, right, with your indicators or whatever. But it's just bullshit at the end of the day, right? It's just one random guy moving his coins and then maybe even selling them on top. Like there's no indicator that showed you that. There's no like PA that showed you that. It's just noise on a lower time frame, right? Obviously, if someone just randomly sells like a bunch of Bitcoin and the market wicks down, people are going to be like, hey, this is discounted Bitcoin, going to buy it up. On the weekly, you will not even see it, right? But on the low time frames, you will. And it's just like that kind of thinking, this, hey, I'm just going to flip back, forth, left, right, center. I mean, that's just not going to work in that circumstance, right? Because you can have the best technical levels, and you can have the best invalidation. You're going to be invalidated by that guy, and then you're going to be invalidated by the guys buying his cheap Bitcoin, right? And I think it's just a shitty way to trade most of the time, especially on the low time frames. On the high time frames, it makes sense to me. Like if you break important structures on the high time frame, something actually shifts, and you're going to have like a trend. More likely than not, that's going to be followed for like a week or two or three at least, and then you can make money off of that, right? But if you're trading flip flop trading on the 5 minute or 10 minute, just know that there's one random guy that just needs to wake up on the wrong side of the bed that can get you in and out of a trade. Yeah, so I don't know. I don't really see how that makes any sense, but
No, it does make sense. There's like a useful criterion you should think of in terms of what constitutes meaningful invalidation. right? And so if you're trading on the higher time frames, it's very easy to distinguish signal from noise. And as you mentioned, because it's a high time frame type of area, there's a decent chance that that invalidation is going to have follow through, and so there's a tradable leg as a result. And I just think a lot of the time, none of those assumptions hold on significantly lower time frames, or at least the way people use it. You know, you have like a 5-minute close, 0.5% below their levels. Like, oh, it's a breakdown, it's a deviation, whatever. I'm going to sell this, and then the next candle, just because it's the 4-hour open, you know, gaps up, and it's like, oh shit, we're back above. I'm going to long it again and put my stop below it. I know it sounds like potentially trite, but that is how a lot of people trade. And I think more generally, if you're going to implement these things into your trading system, or anything for that matter, it's worth asking, am I doing this to have like a psychological cushion / blanket, or am I doing this because I think it'll make money? And a lot of the time, those are two very different answers, right? Like a lot of the automatic move to break even type of stuff, which I don't agree with. I don't think most of the empirical literature and just statistical analyses support that either. I think most of that comes from people who don't like losing trades. There are some exceptions. For example, if your system generates like a very high frequency of trades and your whole edge is being able to sort of get back in and you're sort of price agnostic, I think it can work. But I would argue that's maybe 1 out of 10. And 9 out of 10 is just people who are scared of losing money, scared of any drawdown whatsoever, and so just move to break even immediately. And I think in most of those cases, if they didn't, they'd probably make more money, or they just have really bad trade ideas that require them to do that. It's like moving to break even type of stuff, or coming in with like 10, 20 different plans at every single level. It's like, do you really believe that your trading system has so much edge that every single day is tradable at every single price in both directions? Like, even saying that out loud, doesn't that sound insane? But that's sort of the implicit assumption of kind of modeling your system under those parameters. Do you want to talk about the chart? Or I mean, this has been fairly productive. I'm sure we'll get back to it. In any case, I mean, just read Technical Roundup newsletter. If all of this is too difficult, it does a better job than both of us periodically, Don. So maybe we could take a lesson from that book.
Yeah, I will say one more thing about this all, right? Like, getting like the reason why I think it's so big and so promoted, this kind of style of trading, is one, it's like easy to pretend like you're never wrong, but two, also like a lot of these people trade on ref links, right? And on like there's these people out there, and I don't want to name names, but on Twitter, right, that just promote like low time frame shit garbage trading, right? Flip flopping left, right, and center, and they shield their ref links with it, and they obviously get a kickback from that low time frame garbage trading. It's an easy way to make quite a bit of money. I don't want to kind of like say that everyone is doing this. That is kind of like promoting both ref links and like, okay, you should be trading on the 1 minute or 5 minute or 10-minute chart.
There's some synergy there, right?
But there is definitely some synergy there. Yeah. I mean, it's literally like it's an easy, morally free, because barely anyone actually gets what this is getting at, right?
Yes.
Way to kind of make money off of your followers.
Yeah,
and
it's disgusting. If you're going to use a ref link, just use ours. I mean, have some decency, right? For goodness sake, people. But also, I mean, this might sound conspiratorial, what you've said, but we have had direct contact with an exchange, part of whose sort of incentive program. They set sort of hurdles and thresholds for taker volume, right? So not only do they want people to sign up and deposit and do all that type of stuff, but they're looking for a specific type of order flow from your audience if you're in that position. Yes. And I'll leave you to infer how much edge the average taker order has for someone who's following someone on Twitter and signing up with a ref link. Again, the exception being our followers, because this time is different. At least we're self-aware, Don. Yes. Weekly time frame. So we talked about the little green boy, that could. And really, there isn't a lot in, especially now that we're breaking down, and there's a nice daily box that you have that we're going to talk about. But on the weekly, it does seem a story of like 30 or close to 20, and there's really nothing in between. It's just the threat of giving back chunks of the momentum candle. For a while, I spoke about the level at that little red. I mean, if you thought your small green boy was problematic, my small red boy at 28k, the first red candle after the breakout, that was actually a perfect sort of retest level on a couple of occasions. But that's if you wanted to really grasp for straws on the weekly time frame, that's the best I could do. And absent a weekly rescue, which seems very unlikely, this just looks like it hit resistance. It went sideways. We sort of raised our eyebrow at it, sort of, hey, why hasn't this moved yet? We give it like a week or so. I think especially for ETH, we were talking about how this kind of has to get going if it's not going to be a clusterfuck. And right on time. Here comes the red boy. So what do you think of the weekly? Do you agree that it's sort of 30-ish, close to 20-ish, and everything in between is either for the daily time frame or just not relevant?
Yeah, I mean, there's some sort of like consolidation between 24 and 21, right? Like that consolidation that we had on the way up, but that's basically it, and I don't like it too much. But I think we could get a bounce there temporarily, as in like a lower time frame bounce that we sell into again. But yeah, for me, the map is 30 and 20K. If we go above 30, probably gonna go higher. If we go below 20 and start closing there, probably quite a bit lower. Anything in between is kind of shitty, and that's why I've been kind of shilling the hey, sideline is kind of a cool position to be in since 30K, because the invalidation for that was very, very close by, so it was an easy position to get into. And the cool thing is with that kind of high time frame map, right, with 30 and 20K, it's very, very easy to just kind of look at the daily time frame and get new invalidations there, because as you alluded to, like I have a box on the daily time frame of the current range that we're in, or used to be in until yesterday, basically, which was 27 to 27.5, that kind of red box.
Yeah.
And we're currently breaking below it. And this is a breakout to the downside, or like a breakdown, whatever you want to call it. And I don't think it's very, very wise to be too bullish unless we reclaim that, just based on the fact that you have a really good setup the moment we reclaim it, right? At that point, you have a solid kind of spot where you can kind of put your stop loss if you wanted to, as in the low, right? Like let's say we go to 25 and then we rally like we did back in the 10th, 11th, 12th of March, right? That like we had that breakdown back in March too, and then we had just like 3 daily candles that just went haywire. But you can see how on the 12th of March we closed above the level that we set in February, 11th of February. Do you have it? So that's
Yes.
kind of like that. You didn't need to buy the bottom, right? You could have just bought that daily candle close, or even on the next day that there was a little bit of a retrace, and you would have been getting most of that rally with very little risk, right? Your risk would have been down at 20K. So that's like you're buying 22, your risk is at 20, and we ended up moving all the way to 30K, right? So that's like a good trade, and that's something that I would look for in this kind of circumstance as well, right? We're breaking support. If we reclaim it, good, then we have a trade on our hands, I think. It's a little bit of a shittier one because we are still at high time frame resistance, but I might actually be interested in taking that. Not sure yet, but we'll see. But as long as we don't do that, it's just bearish, right? A breakdown is bearish, and something that we keep talking about, and we've said this a million times on our streams, right? Is that it doesn't really make much sense to consider like a breakout or a breakdown a failed one before it's actually failed. That's something I see a lot everywhere. Like something like a level breaks, and people are like, oh yeah, but now if it reclaims it, it's going to be great. So I can long now because I'm going to make a shitload of money when it reclaims it. But the other way to see it is much better in my eyes, which is, hey, we just broke an important level. I'd rather be not in the market or trading that direction unless we reclaim it, because then you
Yes.
have the proof of strength. You have kind of like a directional bias at that point, and you have a solid place where to put your risk. And those are all good things.
But you don't have clout, Don. You need the
Yes.
WIC P&L card. What are you talking? I think like our value systems just aren't aligned at all. You need some retraining.
Oh yeah, I do. I mean, at the end of the day, right? Like, it's not like I don't buy when it's low. It's just I buy when it's low, when it hits high time frame levels that I find
Yes, yes.
interesting. not when it's just like if there was a high time frame level here at 26K that I was looking at on the monthly or on the weekly, that's one thing, right? But there's nothing on the weekly. There's thin air until 24K. Like even if you're like very, very bullish, there's nothing until 24.2K. That's a weekly level. If this was happening, if we had a daily range and then we wicked down to 24.2 and we went 2 week into that level, cool. That makes sense to me. At 26.5, I just don't see it. Now, one thing that I do want to mention is that I think we've kind of been, and this is something that I said at the beginning of the show, we've kind of been like so weak that we got far and like very, very far away from the S&P, right? The S&P is still chilling and the NASDAQ too is still chilling near its highs. So if that breaks up, we could get ourselves a squeeze scenario which would align with that daily setup that I just talked about, based like if we kind of reclaim that zone. And you have the S&P starting to break out to the upside, then you have kind of like this thing where a lot of people in crypto are kind of positioned for the downside way past, like we've had much more weakness on Bitcoin than we had it in the S&P. So that would be ripe for some squeezing. But if the S&P keeps going down, which it has been doing today at least, it's just gonna, like, that's just weakness, and then we just get a tailwind of weakness basically, or a headwind of weakness, which just kind of like, it doesn't align very well in my eyes anyway for like a bullish trade. So I'm still cautious.
Yeah, the decision tree also makes sense when you say like a breakdown's a breakdown until proven otherwise, breakout's a breakout until proven otherwise, so on and so forth. Because if you think about it, like if you step in front of a breakdown, for example, and this you can apply the same to a breakout, but if you step in front of a breakout before it reclaims, like best case scenario, you get a marginally better entry than the reclaim traders, right? Worst case scenario, you've just stepped in front of a trend forming leg and you get carried out on a stretcher, you know? And that just seems fairly unambiguously skewed towards, waiting for that 2, 3, 5, sometimes even 10%. If it's an altcoin or something like that, because then the probabilities shift kind of non-linearly, right? When you get that type of confirmation, if you will, or at least a shift in structure. And I think the daily example you pointed with BTC was really good. The only proviso there is you have to be comfortable with buying strength, if that's going to be your logic, right? If you're going to be a reclaim trader doesn't mean it's going to retest perfectly. Sometimes it just closes above, and because so many people were trapped, it just fucking sends, right? So I would say for people who like that type of approach of having to be cautious, waiting, etc., you have to basically flip a switch from, okay, fuck this, I'm out until it does something. But then when it does something, you need to be pretty decisive, even if you're not getting the perfect price action as a result. But I agree, sort of daily time frame, we were in a long range, and that range is breaking down. If the breakdown fails, that's a signal. Until you have that evidence, just let it go, to quote Frozen, I think.
Yes. And the whole kind of context is a bearish one at the end of the day. Like you look at the weekly time frame, like this is not a bull market. It's like we had a bull market, it blew off, we lost that range, we went down, and now we bounced a bunch. Like that's the context that we're in. Now, that's not a confirmed bull market at all. It could be like one that emerges, but we still like there's not like we're back above, like back in the old range or something. Like the context is one where this could just be a bearish bounce. I don't think it is, but that's the context, which makes me very hesitant to buy anything that like is actually like a sign of weakness, right? Like a range breaking down is a sign of weakness. A range reclaiming is a sign of strength. So I'm more comfortable. Like if we were in a bull market and the range broke down, more often than not, I would actually just probably buy that range breakdown because I'm like, okay, it's discounted and these people are gonna get squeezed, right?
Yeah.
And it's the same in a bear market. Like you have a breakout to the upside, and you're like, but this is a bear market, right? Like it's easier to fade these. But if you have range breakdown in a quote unquote bear market, do you actually want to fade that? I don't think so. Like to me, it makes no sense. I might like for these, I wait for strength or just for good levels to be hit, and neither has happened so far.
That feels like it's also been a technical roundup staple. Like when you get a big break, you either wait for it to fail or let it go otherwise and give it some space. And when support breaks, you either wait for a reclaim or you wait for deeper levels. And I think that sounds really sort of obvious on its face, but people fuck it up because they might wait for what they think are better levels aren't better levels, right? That's the issue. Like if you're really dealing with what could be, in any case, a trend forming breakout or a trend forming breakdown, and you're looking to fade it, you need to pick your spots, you know? You can't just say, okay, well, yeah, it's breaking down, which is bearish, but it's reached 5-minute support, so that's it, and I'm going to give it space. One way I sort of tried to articulate that on Monday Markets or somewhere was if you think 30K is going to be good resistance, does it make sense for 28K to be good support? Right? Like there has to be a hierarchy of levels at some point where if 30K is going to meet the definition of good resistance, there has to be some non-trivial move that comes as a result. And that non-trivial would mean more than, you know, a couple of $1,000. At least that's how my brain thinks of it. I don't know if that makes sense.
No,
I do think,
totally
though, having a hierarchy of levels is important, you know, in terms of what kind of move do I expect from this level if the market is bullish or bearish. And that's the issue with doing all this low time frame reclaim, etc. stuff. You assume all levels are equal and are likely to produce the same outcome, and both can be traded and can be traded in both directions. But sometimes you just hit like a steamroller level, and it just plows everything between that and the next level. You know.
Yep.
And if you don't have a system that allows you to basically ignore levels, or at least have a hierarchy and prioritize some over others, you're just gonna have a shit time. Even if you're making money doing level to level 15-minute hourly trades, when it hits like a high time frame 20K support style and just rips through everything, you give back all your fucking money, you know, or you don't, I guess, because you flip and reclaim and invalidate and voila, you know, magic. But yeah, cool. That's BTC. So just to summarize, monthly, we're waiting for the experts to tell us about the candlestick formation, but bigger picture, 20K-ish is the support. Weekly looks like it's rolling over from 30K resistance. The next support is at the earliest sort of 24-ish, maybe down to fill the wick at 20 if things get really creepy. The issue with filling 20, by the way, is 24K will look like a failed breakout.
Yep.
So, you know, we'll cross that bridge when we get there. And the daily time frame, which has become very useful this weekend and just in general now that we're expanding from the range, there's a nice cluster from 27.3 to 27-ish. We range there for a few weeks. We look like we're breaking down. If that reclaims, especially with S&P help, there's a squeeze trade there potentially. Otherwise, treat it like a breakdown until proven otherwise. Does that make sense?
Yep, perfect.
Fair, cool. Okay, ETH, your favorite coin. Not gonna bore you with the monthly, although I guess the only question I have is, do you put the same weight into the breakout support on ETH as you did for BTC, or is it too close, the 1680-ish? Because I'm getting some weird gut feelings about it.
Yeah, I don't. I just ignore the monthly. It's shitty.
Nice. Okay, based. Weekly, I think, is the signal time frame.
Yes.
For this thing, and the signals aren't too great. Just going back to last week, basically talked about the failed breakout and how if it was going to move, it has to be this week. We're saying last week, it has to be next week, because otherwise it gets a bit dodgy, and the market is kind of trying at the moment. At least this weekly is red. Targets wise, we discussed, right? If you treat it as a shallow range between 1.9 and 1.4-ish, you get 1600 as a first trouble area. If you take a more charitable view, or I guess it's less charitable if the failed breakout plays out from 1K to 2K, you're left with 1500 as a trouble area. And then your invalidation, similar to BTC, which got stuck at 30K, big level and turned around. I think you can apply the same to the failed breakout on ETH at around 2K. You know, breakout from there, and that would look really good. It invalidates the failed break. And I think we get a decent gap fill towards like 2500 or something. 2500 to fill in a lot of that selling. But at the moment, it looks like resistance has finally chosen to resist. And I don't know if the daily time frame for you is useful in the same way as BTC is, because I think the weekly is like really clear, and the daily structure around here looks not as compelling to me, at least. I mean, I drew some levels on it to, like, for example, the highest close from August at 1983. That was good, and I talked about that on stream as being the resistance that could unravel this thing. But from that point onwards, it just gets very sort of volume nodey, and I think the weekly is better. But do you have any daily source, perhaps, you want to share with us?
I actually also don't like the daily as much.
Awesome, yeah.
I mean,
it just rotates through time frames that we don't like. Isn't that funny? It's like at one point the weekly is like the worst time frame ever, and now it's the daily and the weekly is based. It's playing with our emotions.
Yeah, but I think I mean, the daily does work. Like we had a retest of 2K, which was the resistance in August. And then, I mean, we broke it to the upside. This is the same picture as the weekly, basically. Like we had 2K as a resistance. We rallied straight through it, then failed completely, and then retested it perfectly before selling off, right? That's the ETH picture. I don't really think there's too much to say about it. It's not as clear as Bitcoin. The only time frame where it's good at is on the weekly time frame. And I mean, it's just I don't like it. Like when I see these kind of charts that just get choppy, like really really choppy, I just tend to not trade them as much. I do think like there's an interesting thing happening where altcoins have been generally very weak, and ETH BTC has actually been quite good still, right? It's not like the previous chart; it's still making lower highs. But I think if that changes, it's going to be an interesting trade again. Like ETH, I think ETH generally has a really good narrative, and I don't think that narrative necessarily has played out on a big scale yet. Like it's not like normies are like, oh, ETH is deflationary, I have to have it. It's more like the crypto natives, and that's a very small amount of people at the end of the day. So I think ETH is interesting. And the funny thing is, for all of these altcoins, really, I think the play that is gonna make you most is very likely to be ETH the next time altcoins do well. And it's also like the simplest play, right? I think a lot of people will not take it. They will try to look for more upside in shittier coins, and I think they will both be performing ETH and taking a shitload more risk.
Yeah.
So I think ETH's a pretty brain dead play if you want to have altcoin exposure. It's kind of making, I mean, this range in general, it doesn't seem too distributive in a way. Like I don't think this is necessarily like large selling. If anything, like this is quite the bullish range on ETH BTC. Like very very zoomed out. Still think it can go down a little bit, but just very zoomed out. So I think ETH is gonna have some good times ahead of it. It's just it needs to be accompanied by Bitcoin doing somewhat okay. Otherwise, the USD pair is just going to bleed on you, right? So I don't like the ETH USD pair, but I think the ETH BTC pair is starting to get interesting again. But
Sorry, I just laughed because like ETH BTC, you know my views on ETH BTC at this point.
yeah, I mean,
Every week we come around to it, and it's like a multi-year range. But I agree, like compared to what it should look like, given what the market did, right? That's sort of the argument where
that's exactly the argument,
you'd expect BTC to go down whatever 60-70% and ETH to go down 90, and this range is anything other than that. So it's like a relative strength by not looking awful type of point.
Yeah, and if you compare it to other altcoins
Oh
too,
god,
right?
yeah,
Like
yeah.
like if you look at any ETH pairs, like any altcoin really against ETH, they're completely shitting the bed, right? There's like one outlier in 10,000, and that's impressive strength to me.
My
And there's
bags.
some exactly, and that's something that you should be keeping an eye on. I think it's like if you want to trade altcoins, trade ETH,
Yeah.
and if you want to hold altcoins, hold ETH. Is kind of the thing I'm getting at.
They're going to invite you on Bankless at this rate, Don. You should be careful.
I mean, I think at some point this whole like deflationary thing is probably gonna bite ETH's ass, and then we're gonna see a massive wind down of like this. But we'll talk about that another day. I think that narrative, like for now, we have like a cool narrative where ETH deflationary, so number go up. If it gets like really deflationary and no one's going to use it, all of that kind of stuff, that's in the future, I think, for the next bull market.
That's when we're dumping on people when they realize like.
Yeah, I mean, I think like ETH's going to be quite useless at that point, like just straight up. But that's something for like a proper bull market, and I think at that point prices will be much higher than
exactly.
they are now. So it doesn't really matter. Like price wise, it doesn't matter. I'm always surprised by like the fundamental people basically being so horny for prices. because they should be looking at other things. But
well, they're horny for prices when they're going up, right? That's the funny thing. Like if
Yeah,
crypto's
but
going down, they're always like, "Oh, it's a volatile market. Look at the long-term trend." And then when it's trending up, they'll give you price updates every single hour on like what 1,000 threshold it breached, which is hilarious. Like
yeah,
classic
like
tourist behavior.
and in general, like when people talk about fundamentals, they're like, this is good for price always.
Oh
But
yeah.
which, like, cool, right? Like, I mean, for me, that's great. Like, as a trader, like, that's the best thing I could have. Like, these people that running the show, they're just trying to make the Ponzi go up, right? That's good for me. But is that really the best thing for the protocol? I don't know. Like, I'm not an expert. It's the best thing for
Sure.
me as a trader. Like, they
Yes.
make Ponzinomics happen. Great for me. Is that really the best way forward? I don't know.
We've also made it like an impossible ask, right? Because so many fundamentals are like price informed or volume informed, just kind of price informed as well. Like it all comes back to speculation anyway. And a large part of speculation is price. So you have fundamentals that are so closely tied to price anyway, or usage, which is also tied to price. Like all roads lead to price, basically. But yeah, if people want to talk up my bags, that's, they're more than welcome to do so. I think that's really it for BTC and ETH. Not much else to say.
No.
Let the Bitcoin breakdown play out. If it's going to happen, if it reclaims, you can have a conversation. Keep an eye on Legacy. Let the ETH failed break play out, and then if it reclaims, we can have a conversation. I think giving these things some time and space kind of makes sense at the moment.
Yeah.
In the most recent technical roundup, we talked a lot about altcoins. We came out of our Bitcoin Maxi dungeon, Don, to mention the shiniest coins in the market, and we didn't take a particularly optimistic view given well everything, and it seems like we got lucky if we're going to be intellectually humble about it, right? As much as I'd be like, oh, we nailed it, etc. I mean, who knows? Maybe it's just luck and variance. But I'm just going to bring up the newsletter here on screen, and the ones we talked about were Arbitrum, Pepe, Optimism, and Lidos. That was on Tuesday. They're down significantly since then.
Oh, I mean, Pepe is down like 50% since the newsletter where we should talk it.
Yeah, I'm glad we both made $0 on that trade.
Yeah.
Please subscribe to the newsletter, trletter.com.
It's not like we're making any money off of that anyway.
Yes. If we're not going to make any money, someone else should.
For the people that don't know, it's a free newsletter.
It is a free
newsletter. It sounds like we're getting paid for it, but we're not.
I know. We're not getting paid for it. We're not paying ourselves for it.
Nope.
I mean, it is a sponsored newsletter, so I guess the first claim isn't technically true. But whatever. As far as the content, they've been doing this for like... The interesting thing about the newsletter is we've been doing this for like 5 years now or something, 4 or 5 years. And it kind of has its own system. Of like the conservative, high time frame level, no bullshit type of system, and it just works pretty well. Like it won't always catch the extremes, etc. But like the big high time frame stuff, it tends to be pretty decent. So I want to kind of go over how the market has evolved since then, and maybe talk about altcoins more broadly. And I think the arguments we made on Tuesday are obviously just as applicable. And so when we talk about Arbitrum, there was an argument made that there doesn't seem to be enough liquidity to go around and create a rising tide to lift all boats. So the market has been very selective on the assets that have performed well. Just talked about how price action wise, what this thing essentially did was it got listed, right? That's good.
Yep.
Airdrop, listing, lots of hype, winter mute, governance drama, etc. It gets listed, it ranges, it mega pumps, and since then it's fallen out of that range and is retesting the underside. And this is supposed to be like the least sort of new supply, no old bag holders, apart from the classic unlock whatever type of stuff. This is supposed to do well for longer than it has done well. I mean, look on the daily time frame how long it took to just retrace everything. That's nothing, right? And so technically speaking, this is one of those patterns that I'm not a huge fan of. Well, if you're holding the thing, because it's essentially a failed breakout into kind of what looks like a real breakdown, and so as far as alts go, again, same argument applies. If it wants to reclaim, I think the level we had was that pre-breakout cluster at $1.20. I think if it wants to get above that, it starts to look like at the very least it's back inside the range, and we can have that gives you validation. We can have a conversation, but similar to almost BTC and ETH, like stuff is breaking down. Just let it do what it has to do. And if you have to wait 2, 3, 5, 10% to have a much higher probability trade, I think a lot of the time that's worth waiting for. I mean, you can't even meaningfully TA beyond what we've already done, because what do you fill the listing gap? Like you start reaching some absurd conclusions. So that was Arbitrum. The other one we talked about was Pepe, and I'm sure you've got more thoughts on this. And I just closed the newsletter because I'm an idiot, but so I'm going to reopen it now. Pepe, the argument made was essentially we've had what looks the magnitude of this correction feels somewhat blow off toppy, which is the argument that we made, and also more importantly, sort of narratively and fundamentally. There was a break in market structure and in the uptrend, and around the time of the Binance listing, I think that was the top to the day before the market knew. So that's pretty telling, right? Like, it gets listed, people get FTX PTSD, that perps, like, listings, futures listings, and even spot get dumped for new coins. Instead, funding goes absolutely insane, squeeze, and then when you get some real beefy liquid spot markets, it seems like the new millionaires wanted a piece of the pie, which is good for them, of course. What do you think of? I mean, you talked about the magnitude of the correction, but hey, who's been counting? Today it's down 13%, obviously more than anything else, but also went up more than anything else. So some balance there. Yeah, Pepe, thoughts? Is that support, Don? Are you buying this thing?
No, I'm never gonna buy this thing. But that's the thing. I never set out to buy this thing in the first place, right? Like, we talked about this on stream before. It's like, I was never gonna buy this in the first place. I'm never gonna buy it now. Like, I don't really see the point. Like, it's literally just a meme coin, and I think it has played out. A lot of people don't seem to realize that Pepe coin, right, is a thing that has happened I think there's been a Pepe coin for every week since 2017. Like, someone's made a Pepe coin every single week for the last 5-6 years. This one caught on, right? But it's not like this is anything special. It's not like, at least from what I've seen anyway, but honestly haven't even looked into it too much because it's just so memey. But yeah, I think it's just a meme coin in a market environment where risk isn't really doing too well. So we kind of had this once in a million kind of pump happening on it. A bunch of people were looking for risk, or were sitting. I think the reason why it went up so much is because a lot of people just kind of missed the rally from 15 to 30K, and they were like, I need to make my money back, and this is an old season, so I'm going to make my money back. And then they just threw out all their risk management and just bought Pepe, which fair enough, right? But if you're thinking like that, right, one, it is kind of obvious why Bitcoin went down, right? Because that's where the people that were sidelined just couldn't take it anymore. Like, that's the capitulation point. And also why this is just not going to maintain for too long, as in like at high market caps, because a bunch of people are in an environment where risk isn't doing too well. And they have made a shitload of money. Like, the people that bought it early made a shitload of money, while the people that bought it late are on heavy losses. So not only did a lot of people just kind of miss out the rally in Bitcoin, but they now bought a shitcoin that is worth zero, and they're underwater on it, right? Because let's be real, like, most people that actually like hold Pepe now, they're underwater as fuck on it. Like, it's just how it works. You cannot have like, the early people that bought it is a handful, or like 100 or 1,000 maybe, and then the people that bought the top, that's 10,000, 100,000 maybe, right? So a bunch of people are in pain basically, and I don't think they're gonna hold forever. So slow bleed out is what I think is going to happen to that coin, but I'm really not going to ever trade it. I'm just going to use it as kind of like an indication of where the market is at in regards to risk.
And it was very useful in that regard.
Yeah, I'm kind of glad we have it, right? Because usually Dogecoin does this, where at the tail end of a rally, Dogecoin just goes off, or any of the other meme coins that we have. This time around it was Pepe, and a very clear pump too. Like, it wasn't just like, oh, something went up like a little bit. No, this shit went up to like market cap spot 50, maybe 40,
something
even.
Ridiculous, yeah.
From nothing basically. So like, a lot of people kind of got involved, and it just goes to show how willing people were to take risk at that point. And like I said, this is an environment where I think risk taking is not really like, it's not really something that most people want to actually do, right? I've seen so many people talk about macro risks and then throw their money into Pepe, which I find quite funny. But yeah, so basically, I think that behavior is probably not going to be rewarded. And I think if Pepe goes down quite a bit, like if it ends up being down 90-95%, and I made a tweet about this yesterday, I think, or the day before yesterday, I don't remember. I think the moment Pepe is down like 95%, all of that kind of risk taking, that like recklessness is going to be washed out of the market. And at that point, we're going to get massive depression again.
Oh, I thought you said
And
at that point you buy Pepe. I was like, Don.
no. The thing is, like, for the people that, like, I see a lot of people being like, hey, I want to be buying this because in the next cycle, it's going to go like crazy. Maybe, but the chances are something else is going to come out, right? Something like the same thing with like that we had with Doge and Shiba.
Yes, and just alts, right?
Yeah, or with any other altcoin. And this is discussion I have every year or two with people in my comments, right? Like the new people come in and they're like, nah, but my shitcoin is gonna stay around, blah blah blah. Sometimes we recycle shitcoins, but almost never, right? Like something goes up a shitload, people buy in when it's high, and then it just bleeds out and it has like a few 2x, 3x, 4x, 5x pumps on the way down 99%, right? And then a new coin comes around, pumps 1000x, and does the same thing. And this keeps on happening. So I think this might have like a dead cat bounce. I think that's the most sensible play for Pepe, where it kind of like doubles or triples, and then people are going to buy it again because of course they are, right? They're like, oh, this went 1000x before, it's going to go 1000x now. I'm going to buy into this pump early because last time I didn't buy early, right? This is always the thing. Like people look at it, they find it stupid, they don't buy in it. It goes up 100x, and they're like, ah, fuck, I should have bought. Then it crashes by 90% or like 80 or 70, and people are like, hey, now I can buy in early. Like right now, I can be an early
Run it
supporter of
back.
this
Market
thing.
structure is exactly the same, you know.
Yes, but
Yeah.
now you have a bunch of backholders. So
Yes,
basically,
yes.
what you're doing is you're buying a bunch of backholders coins, and then you get dumped on, and then you lose money on a coin that you didn't want to buy or didn't think was sensible to buy. That's kind of how it usually goes.
That's how it always goes, it feels like, right?
Yeah, I mean that's crypto in
I
a
mean, even
nutshell.
Sol. Think
Like,
about Sol, Luna, Avax, Axie. Like there
oh
were
yeah,
months in this market where if you bought anything other than that, you were like certifiably an idiot, right? Because you,
yes,
because everything else vastly underperformed. And now, if you look at those coins, one of the ones which exists out of those, Solana did absolutely nothing while Pepe went to a million X. That's been range bound since the start of the year. Right? That's a
yep.
year-long sideways on the coin, which was the hottest commodity ever. Luna, self-explanatory. AVAX, similar to Solana, it's just done nothing from the start of the year, but
Oh yeah,
range.
it's one of the worst looking coins.
Yes, and then Axie, which we looked at last time. I mean, if you take like a monthly non-log view of that, for example, I mean, this is
Horrendous.
I know, but this is exactly this is how it works with altcoins.
Yeah,
So
I
if
know.
you feel like you missed Pepe, there's going to be another 10 different non-Pepes, which are all likely to do better. And this is the thing. I think you present the argument very well in terms of how people reason about it. Like, oh, now it's at the same price, therefore it's going to do the same thing. But market structure changes so fundamentally between those two time periods, with like attention and bag holders and listings and momentum and flows and everything. It's just because the price and the chart are the same doesn't mean the returns and the asset is the same by any means. And even if it does well, and someone says, "Oh, well, look, you were fudding Pepe in whatever May of 2023, and then it went up whatever X next time the market is risk on." Your hurdle shouldn't be sort of just catching a pump on the same thing. The question is it going to beat the hot, trendy, shiny stuff of that same time period, right? Or even fuck it, is it going to beat ETH? And if the answer
Yes.
there is no, then you're taking on more risk to underperform, or just taking risk elsewhere and still underperforming as a result. If you sort of miss out on the shiny stuff and buy bag holder coins, it just doesn't make any sense. Yeah, you just have to be really cynical with this type of stuff, with a couple of like technological exceptions, which has thus far literally only been ETH. I just assume all of this stuff is recyclable, and people the whole industry is incentivized to make new shiny stuff for you to buy into, and we've seen that play out perfectly over the last like 3
Yes.
weeks.
I think the way I look at it when I'm buying altcoins, right? Like, I mean, there's Bitcoin, there's ETH, and there's really not that much else. If you buy something that isn't both of those things, I mean, the most likely outcome for that thing down the line, right, 5 or 10 years down the line, is that it goes to zero. This has been the case with every single crypto that has been around for long enough. They're kind of trending towards zero, right? Like the funny thing is, even on the USD pair, while Bitcoin has been I mean, Bitcoin went basically from nothing to 70K, and the oldest altcoins trended to zero on a dollar pair. So when you're buying something that the ultimate outcome of will be zero, you're kind of like you're trading the wrong direction, because you kind of know where this is going, right? And let's be real, like everyone knows that like Pepe isn't going to be around in 10, 15 years. Like there's no way. Like there's going to be other coins that's going to be similar that might be around, but Pepe, this one, probably not, right? And the same thing with a lot of these other altcoins that are around right now. I would say there might be one or two exceptions besides like Bitcoin and ETH in the market right now that might stick around for 10 years, but I wouldn't even be sure about that, right? So you're kind of like you're trading bullishly something that you know will trend to zero. And then you have to have a really, really good reason to do so, right? And this sounds like super Bitcoin or ETH maxi or whatever. It's really not. It's just
It's
like
the evidence.
it's literally just my experience in the market, right? Like this has been proven over and over and over and over again. And you have the favorite coin, like of at one time, a couple of years ago, if you said the best coin isn't Link, you were getting lynched, right?
Yes.
Now Link is down against Bitcoin since its high, 85% currently. It's been trending down for the last 3 years. And I mean, maybe it's going to have another rally at some point. But the fact of the matter is, like, you go through all these coins that are a little bit older, and Link is, for me anyway, like one of the newer coins, which is quite funny
Bro, what
because
is that chart? Link
it's like
BTC on the weekly. I've got not long.
horrendous,
Yeah, yikes.
horrendous. And I mean, that's one of the newer coins, right? And that was just a couple of years ago where everyone was like, hey, this is going to change the world, whatever. It hasn't, and it probably won't. And there's probably going to be another coin that's going to come around that's going to steal its thunder, and it's going to go up 50 or 100x. And then you will never talk about Link ever again, or like a few people might. But like that's the thing, and this is one of the fundamentally sound coins.
Yeah, it
If
does
you go
stuff. It's like the go-to oracle in DeFi, right?
Yes, like it's actually doing something. And then you have like stuff like Pepe, which is literally just a meme. And if there's one thing that anyone that uses the internet should know is that memes come and go very fast. Like you have a meme, it gets popular, it's all over the planet, and then half a year later, people are like, ah, yeah, that was funny. But it never gets posted again. No one really gives a shit. It's a meme, right? And
Bad
that's
luck,
how
Brian, buying the altcoins, you
like
know?
this is like it's cringe now. Like no one would like the old memes are just like outdated. It's just not how it works. And then it's the exact same way you should be trading these meme coins if you're trading them at all. For me, I'm not trading them because the outcome is pretty obvious, zero. If anything, I think there's a few ways you could be trading them. I heard Avi actually talk about like a way to trade altcoin, that meme coins, which I found quite entertaining, which is basically just writing a script that looks for certain parameters of meme coins. Like you make sure that that you can actually sell the coins, that like that they cannot inflate the coin, all that kind of stuff, right? You write a bot, and then when the timing is right and stuff is going up, you just let that bot do its thing and basically buy everything that hits your
Yeah,
criteria,
you buy
and then
lottery tickets in some defined criteria that mean it's not a total scam, right? But
exactly,
that's not how
and
people
then
think of it. They just think I'm going to hold this forever, and that's it.
yes, and then you sell it at some point. And I mean, that's the way you
That's
can
the
trade
important
these
part.
things. Yeah, and I think at that point I'm like, hey, there's actually like, if I was earlier in my trading career, I think this is exactly the type of stuff that I would be looking at. Obviously, it depends on the market conditions. Right now, if you're buying a million meme coins just because they have good parameters, you're probably not going to make money, right? Because meme coins just been going to zero basically in the last 2 weeks. But that's like a way to think about it. It's not like, hey, I'm gonna buy the retrace of Pepe. It's down 70%. I'm gonna get rich off of it. You might, but I think the chances of it are very, very low. So
Yeah.
I don't.
And again, there's a huge like sample size issue with these things. People see the ones on crypto Twitter that do well and don't see the thousands, tens of thousands of actual scams and rugs, right? And then also people who fantasize about the whole, oh, if I'd bought in there, I'd make this much money. The odds of you holding it to anywhere near your target or whatever P&L mental calculation you're doing, close to zero, right? Or effectively zero. So even that argument isn't compelling because purely from like a trade management point of view and position sizing, etc., it's one of those, if my auntie had bollocks, she'd be my uncle type of thing, Like if I just went all in at the bottom and held it all the way to the top, I'd be rich. So I'm going to try it again on something. It doesn't stand to reason.
And if you held it that long, you will hold it all the way back down.
Yes, that's true.
Like no one that holds that long that doesn't take profit is gonna sell the top. You cannot tell me that's a thing, unless you make the top because your size is so big. Like you bought like $100 of Pepe, and you made like 100 million, and then you just sell because you're like, oh, I'm up enough, and that's the top that you create, right? Fair enough. But if it's just like a smaller fish that just holds all the way up, you're gonna hold all the way back down too.
Yeah. I think all of that is very useful. I think generally, narratively, what we've seen is BTC and ETH struggle at resistance. The market goes all in, super far out on the risk curve into meme coins and other garbage and gets extended there. BTC and ETH sneeze, meme coins and alts dump mega hard. And even the stuff that should be strong isn't being strong and is being weak. And a lot of the froth is getting flushed at the moment. I'm sure some people are fairly nervous looking at the market in that type of state. And just generally, it seems like, as we wrote in the newsletter, a lot of the sort of narratives just haven't catalyzed or had the same price impact. Like more regional bank failings just kind of were priced in at this point. And didn't really cut it. The ETH deflationary stuff didn't really cut it. And then the meme coin narrative, I think putting those two terms together is almost a contradiction in terms. So again, maybe just reclaim some stuff and send legacy, and we can have a different conversation next Friday. I think that'd be really cool, actually. But until that evidence emerges, we'll have to wait and see. Let's coast through some headlines. To wrap up this week's episode. And if you're enjoying Casual Friday, do leave us a like and a subscription. We also like comments. We do love to hear from you. At least I know I read them. God knows about Don.
No, I do read them.
Great, we both read them, so we'd love to hear from you. So, first article is leaked documents show Celsius was plotting a bold business pivot weeks before bankruptcy. I don't know, man. Having lending rates that don't reflect the risk-free rate or anything close, and outsourcing lots of your yield to yield farmers who don't actually hedge the token already seems like a bold business pivot. So yes. I'm not entirely sure where you go from there. But yeah, CWS would have offered generic versions of Celsius's products, including those focused on yield and custody. Documents obtained by the block show that Celsius approached both Wall Street bank Goldman Sachs and Abu Dhabi-backed fund ADQ about a project branded Celsius Web Services, and described as Web3 toolbox for a new world. Basically, just wanted more money, really. And then there's a quote here: what he, Mashinsky, wanted to do was create the Amazon Web Services of crypto. So thankfully, that didn't fucking happen.
Oh, dude.
But that's the thing, like, 2021 was a disaster, and 2022, whatever, all time is the same, and just completely nuked everything. But if these Ponzi's got any bigger, like Luna and a lot of these yield lending products, whatever, like another 3-5 months of bull market, or like a 2x in TVL or something like that, there would have been no crypto to save at that point. It would. I know that it feels like it now, but I feel like if these Ponzi's exploded at a terrible time, and sure, they were massive, but if they were like significantly bigger, there'd be nothing to salvage, or at least the bear market would be so much worse. It'd be dealing with like magnitudes of GOX type of thing, it feels like.
Oh yeah.
So maybe it was a bit of a mercy killing that it happened when it happened.
The thing is, like, we already, like, the US government is basically like trying to kill us already. If this went any bigger, we would have had much bigger problems, because I don't think that at that point it would have been just the US government. It would have been more than that. So yeah, kind of got to be, I mean, quite like, we cannot be too sad that it blew up the moment it did, because I mean, if this bubble got like legit, like a little bit bigger, I think we would have had like, I mean, the whole thing could have ended, I think, for like a long, long time. I think we got in general really close. Like, some of this stuff, too big to fail is actually like a reality at some point. And I think we got really close. So it's good that we wiped out all of these like scamming pieces of shit. Problem is, the next time we're going to be at 60K, we're going to have another one of those.
Yeah.
So
Homegrown versions, baby.
yep.
You know
So
I'm bearish on the whole industry learning its lesson type of thing, so,
oh
so I
yeah,
really
yeah.
expect that type of behavior to repeat. Though Kwon set to be released after Montenegro court accepts $436,000 bail, and obviously Korea wants a piece of him as well. So we'll see. You know, man's got his freedom. Your size is size, at least for the bail officer. And yeah, it's just fun. It's still kind of insane to see all the faces of the craziest bull market we've ever seen basically be in jail.
Yeah.
That part isn't lost on me. More interestingly, just to coast past that one, Binance CEO looks to cut majority stake in exchange's US unit, according to the information. He's a majority owner of Binance US. This is CZ, trying to cut his stake in the American unit since last summer. The information reported Thursday, citing two people familiar with the matter. This isn't terribly surprising, right? The whole
Yeah.
Operation Choke Point, Chokehold sounds like something I'd do on a weekend. But in any case, I just don't know why I said that. It's not even true.
You really shouldn't have said that.
I know. That's a disaster. But yeah, I mean, look, we've talked at length for weeks and weeks how hostile the US is to crypto. And hostile both from like a regulatory point of view, but also just making it impossible to comply from like a SEC perspective. That this doesn't surprise me at all. And also these things, the US entities, they do some volume and they're used, but you and I are acutely familiar, as are many court documents at this point, that the bigger US based traders for the longest time just either got special access privileges or VPN or other sort of really really basic ways of getting around the geofencing and stuff like that. It was never a big market because whatever big participants were there either just moved out of the US or found a workaround, to put it charitably. Especially because the liquidity on the US venues is so much worse than the sort of offshore equivalents or the global exchanges, if you want to be kind, that this was never a huge part. It's a profitable part of the market, but it's not like a huge part in terms of volume as far as I'm aware. What do you
Yeah.
think?
No, pretty much exactly the same. I mean, it wasn't really big anyway. Not like I don't think it's even gonna affect a lot of traders at the end of the day. Like I think the volume was quite little and no one really gives a fuck.
Yeah.
But it does show how kind of wrecked like US businesses are getting, right? Like this is quite wild. Like we have Coinbase basically being like, fuck this. We have Binance doing the same. We have a bunch of US government, like US businesses that already went bankrupt, right? And then the rest is basically just moving out, which is not good for the US, I think. I mean, it's pretty clear. If crypto amounts to anything in the long run, which I think people take way too for granted, but I mean, fingers crossed it will. The US is just setting itself up for a ginormous loss, right? Because you basically just push everyone away. You're not going to make money off of these people, and you're not going to be a part of basically a new tech sector emerging, which seems pretty dumb to me.
All that money, all that talent,
Yeah,
the
exactly. I mean,
narrative
it's brain
shaping,
drain at the
influence
end of the day.
shaping. Yeah, 100%.
Yeah.
But also to that point about the future of crypto, it gives me a nice segue to share one of my mega sizzling hot takes, which I expect that a lot of people are going to disagree with, hence the hot take part. But I don't know what you think of this. But in my view, people who are looking to get into crypto now, and especially if they're thinking of themselves as like investors or god traders or whatever, I think they would make more money over a 2 to 10 year period, or certainly like a 5 to 10 year period, if they just spot bought some BTC ETH and forgot about it, and instead just focused on AI and all this chat GPT, large language model, AGI alignment, whatever it is, like in that space, which is going to go through its own bubble. But I feel like people who feel like they're super early to crypto have an actual chance to be fairly early to something that has already more product market fit and use cases than crypto. So someone who's thinking, oh, I just want to like trade on whatever exchange and punt and invest and do DeFi governance, etc. If they just bought like BTC and ETH spot and then chose the other bubble, I think that's a pretty strong combination. Is that insane?
No, the best part about it, right, is that you're gonna get the upside of crypto because if crypto goes up, Bitcoin and ETH are gonna go up. But you also like for the AI stuff, you actually don't need to have a lot of money. You can as long as you can think of use cases for this stuff and know how to apply it, you actually don't need money at all, and then you can build something quite cool,
Or
make
just
more
go
money.
work somewhere, right? There's also that. Just get a
I
fucking
mean,
job. That's really what I was thinking. Like, oh, okay, well, all this AI tool came out, and I wrote a fucking prompt guide for ChatGPT, and I spun up my own versions and I built this app, and you just go work for OpenAI or 10,000 other startups or something like that. I just think the space is ripe for, like, it's gonna bubble, no doubt, right? Just because of how these things work. But I think again, over the 5-10 year period, BTC ETH plus give the AI Ponzi a go instead of your fourth cycle in crypto, thinking this time is going to be different. Maybe there's something there.
well, you just nuked our
Which,
entire
which is
Reflink income.
yeah, true. Use our Reflink before you go to AI. I thought you meant nuke the entire show. Like, okay, guys, I'm out. Fuck it. Like,
Also,
I have a better idea.
I mean, also, but I think in general, like, people get too hung up on the trading part. But then again, just I cannot, like, I understand why, because I think for me it's one of the best jobs you could ever have. Like, it's some of the most fun, some of the best times and worst times in my life have been spent trading. And I don't think there's like a more competitive game on the entire planet. Like, there's just nothing like it. Like, basically you're competing with the best and with the worst as well. Like, it's not like there's an elo system or anything. Like, you're just in there, and if you can if you're better than the majority, you're gonna make some money. If you're worse, you're gonna lose some money. And there's nothing quite like it. But also, I mean, the big guys are just quite, like, they're, one, smarter, and two, they have more resources than you do. So you have to be quite, like, quite good at what you do, either by, like, having a really good intuition, or having, like, a very, very analytical brain, or, like, there's a few ways
Or
you could.
trade where they don't. That's also an option. Just fucking avoid
Yes.
them. Go on chain, go NFTs, go fucking meme coins, go to where people who are smarter than you, bigger than you, and have more information than you are constrained. I think that's also a good way of doing
I
it.
think that's actually really good advice too. Yeah.
Yeah.
So that's
Which is
kinda,
why
you
we
have to
talk
be.
about BTC and ETH for like 90% of the show, technically the most competitive by those parameters. But yes.
Yes.
It's because the monthly time frame is based. That's why. It's
Oh
nice
yeah,
and
I mean,
simple.
like, that's the thing. Like, you just outdo people by zooming out, because if you just think about how the average human works, right? You want to have instant gratification. I think you're going to beat like 80% of the market by just not looking for the instant gratification, rather than, like, you just look for something um, that is going to make you money in the, like, a little bit longer run. Like, that's already going to beat a bunch of people that are just sitting there wanting, like, the P&L to be, like, they want to make 5% every single day on their portfolio. Like, those people are pretty easy to take money from at the end of the day if it's PvP, right? So that works. It's just like when you get into the lower time frames is where you, like, battle it out, and the edge gets smaller and smaller, especially given that the lower time frame your trade is, the more fees that you're gonna pay for your trade. It's just how it works.
Unless you sign. No, I'm not going to go there. But yes.
I was actually setting you up for it too.
No, there's no way. It's too dirty. It's too dirty. But yeah, no, I agree with that. Especially people who are just trading without any decent infrastructure and think they can go really high frequency. The really high frequency stuff is by far the most competitive, right? That's sort of where the brains and resources are. But hey, as we talked about, that there's a lot of appeal to the lower time frames, and I think they are very tradable. I don't want to be this high time frame maxi who's like, oh well, the markets are so efficient that unless you're trading the monthly on like a swing basis, you've got no edge at all. That's not the point. Not the point I'm trying to make. I do think low time frame edges can definitely work, but if you're going in there trying to make markets like on Binance against the quants with your like grid bot, I think you're gonna get adversely selected quite a bit. We screwed up. Coinbase chief legal officer apologizes after Pepe newsletter controversy. Coinbase's chief legal officer apologized on Thursday for mentioning in a newsletter that some groups consider Pepe the Frog a meme hate for the far-right groups. Wait, did I read that right? Oh, wait, that's weird. I see, I misread this article. So I thought that they just mentioned Pepe, and people got offended because in some parts of the US, which we know apparently is the whole world, right? That's how it works. Forget that it's like a global meme. If some people in the US think it's a certain thing, it means it is that thing. I thought that they got heat for just talking about Pepe, and those people
No,
came out
no,
and
no,
said
no.
it's a far right thing.
Oh,
They got in heat for saying it's a far right thing.
yes, I got a little bit of insight in this
Oh,
actually.
please tell us.
So what happened was that they sent out an email basically like describing what it was, and basically, it wasn't positive Pepe. Let's phrase it that way. And they did talk about like, hey, this meme was originally like from the far right, blah blah blah. Anyway, like that's a pretty stupid thing to do in my eyes. Like, it's Pepe is like a meme that is globally used by
Exactly.
all kinds of people.
And
Like,
memes
that's
evolve, right? That's also,
yes.
yeah.
I mean, in general, like if you want to hate stuff for what they represented 20 years ago, if they represent something completely different now, I think that's just stupid. It's the same kind of stupid when people go through Twitter for like their favorite celebrities and search for like terms that you cannot use today anymore, and then like some celebrity tweeted something out 20 years ago that it just isn't right anymore. I find that stupid, right? Like they wrote it 20 years ago, they wouldn't write it anymore. I like, why go after them for something that they did 20 years ago?
It assumes they still hold those views today,
Yes,
which is an insane thing to think.
and
Although I'm
in
going to run
general,
that bot on your account right now, so stay tuned for next Casual Friday. Cancel
but
Friday.
I think in general, like also like the what is okay and what isn't changes over time, right? And that's just how the world works nowadays. So doing that is just kind of stupid. So that email was kind of stupid. The whole thing was like even more stupid. And then the Pepe guys actually went to the SEC and went after Coinbase and put in like complaints, like thousands of people. And the problem is, right, at the end of the day, Coinbase is representing all of crypto. They're fighting battles against the SEC anyway.
Yes.
And
They're one
on
of the good
losing.
guys for any
Yeah, they're the
useful
good guys
definition.
on losing ground. So basically, the Pepe guys went after the one company that is trying to make a good change for writing an email that no one really gives a shit about. The most retarded thing I've ever seen, not gonna lie. Like, it's so stupid. It's the
Speaking of
most
things you can't say.
yes. But like, it's the most bearish thing I've ever read about a coin, right? Like, these people being so low IQ, I mean, either it's the most bullish or most bearish thing, I don't know, but it just makes me like, it's just the saddest thing ever, right? Like, this is just like 50 IQ behavior. Like, if your complaint with the SEC is actually going to go through and actually going to have an impact, we're all going to suffer and your Pepe is going to go down. If it's not, it's completely useless. So it's kind of like this.
Wow, I completely got the wrong end of this.
No,
I thought Coinbase is just like a classic Pepe coin type of thing, and then people went after it. Non-crypto normies went after it, saying, "Oh, Coinbase is endorsing the far right." I was so wrong. At the same time, just at the time of recording this, Gemini is doing $1 billion Pepe giveaway. It's always funny to see like slow-moving centralized exchanges join these trends super fucking late. You know,
Wait, what?
Like,
It's doing a giveaway of Pepe.
yeah, it's doing a $1 billion Pepe giveaway for some sign-up thing on Gemini after it's down like 77% from the high.
Great.
Or whatever it is.
Yeah.
But it's always fun. I mean, they would have loved to get this out like a week ago, but this is where the whole regulatory arbitrage angle becomes super obvious, that the more loose venues, call it that, list it like immediately. And then the slow-moving dinosaurs who want some of that flow, but have to go through legal and compliance and all these checks, end up doing it like after the thing is topped, you know?
Yep.
Which is why it's useful to have accounts on many exchanges, including... No, I'm not going to go there. It's fine. They only pay us for 2 plugs, though. I'm not going to give them 6. Counterculture NFT collection Milady Maker surged in volume after Elon Musk tweet. So, speaking of killing memes... I think Elon is like the grim reaper of things being cool on the internet. I don't know if you feel that way.
Oh,
but he
yes.
has such like a normie sense of humor and like meme awareness that if it's been in the subculture for like weeks, months, and years, and people are starting to, you know, if it's just there, he will always be late to that thing, and then at that point it becomes like a normie thing because he's so high profile, and the meme dies. I mean, he was the biggest cheerleader and then ultimate killer of Dogecoin, for example, and it just, I think a lot of people, from what I saw charts being posted, understandably, maybe it's not exactly Elon related, just price related. Those two things are correlated. A lot of people selling into that rally and don't feel it's as cool anymore. It's like when Suzu from 3AC put his profile picture as a milady. A lot of people are like, oh, for fuck's sake, this has been co-opted by people who want the social benefits of being associated with a meme without sort of paying dividends to the community, is probably how I'd articulate that. But yeah, I mean, we're still in the meme market for all the points we make about like sophistication, how competitive crypto is, especially on BTC and ETH, and depending on how you trade, etc. It's still like a very juvenile, very young, very meme adjacent market, and it's probably best when we don't take ourselves too seriously. Although not to the point where the entire industry blows up and sends us to zero. Maybe take it seriously enough that you don't do that type of stuff. But some lightheartedness, I think, it's fine.
Yeah. I mean, I don't want to, and this is like the kind of tightrope you have to walk, because I don't want to demonize the memes, right? Because the memes are great. Like, I mean, Dogecoin back in the day, like that made my day. That got me into taking crypto serious. More like, I mean, that's just funny, right? Like, you kind of onboard people with something that is completely stupid, and that's fine by me, right? I don't know, like it's a weird thing, right? Like, I took advantage of Dogecoin back in the day, made a bunch of money, made crypto my full-time job because of it. So like hating on memes is like a little bit of an odd one, because that's kind of what made my career. Um, I the one issue that I have with them nowadays is that they're very clearly cash grabs.
Yes, 100%.
Um, I have a little bit of a problem with that, because back in the day, at least to me, it felt different. Like, Dogecoin was about the community. Like, they did some dumb shit, like they sponsored like a NASCAR car. They did like a bunch of a bobsledding team. Like, that's funny stuff, and they kind of banded together and scraped like a few dollars that they had
Yeah,
left.
feels organic, right?
Like, that's cool, right? And then you have, yeah, exactly. And then you have these meme coins where like influencers like BitBoy like make like coins or get into coins because they're hot, right? And because meme coins are hot, because you can make a bunch of money with it. And I'm not a big fan of that. Like, that just makes me disgusted by this space, more so than being like, hey, this is just kind of cool. Um, and nowadays, every time one meme, like even if it's an organic one, kind of gets big, 100 scam ones kind of just show up instantly, ruining the fun. And that's like a little bit of a, like, that's what makes me bitter about them all. But yeah, I don't want to shit talk the memes. At the end of the day, like, they can pull people in, but they can also, like, if we have like scams left, right, and center everywhere, and this is like what we have right now, it will get people in, and they will get scammed, and they will hate crypto forever. And that's like not necessarily what we need, I think, especially not after having like one of the biggest exchanges blow up, one of the biggest coins blow up, and everyone go to jail in the same year. Like, we don't necessarily need that right now, I think.
I
But
agree. Yeah, it is a tightrope. You don't want to be like too elitist about like and be one of the suits in the market who's like looking at discounted cash flow and other stuff.
yeah,
But also if you're like all in memes, nothing is serious, then I guess some risk managers from last year thought that way. Coinbase Pepe is we'll delete Coinbase trading on Twitter. We talked about that. This was the real story. Quite funny. Tether reports 1.5 billion net profit for first quarter in latest attestation report. So Tether's just mega printing money now.
yeah,
But I also think they're holding some Bitcoin now.
yeah, Bob,
So
quite a bit.
yeah,
1.5 billion worth, I
1.5
think.
billion it is. Yeah. So it's good for the industry given how much the US government like killed USDC essentially, or at least took a
Yep.
chunk out of their dominance. So that's not great for the US. And Tether perps and Tether denominated pairs still do like all the volume because that's what they use on Binance, etc. And also just other exchanges. That's the go-to. So Tether being robust is probably at this point net good for the industry, I'd be willing to argue. But despite the mega trillions they're making, I'd still rather they didn't have the Bitcoin, you know? I don't know if that makes any sense, but as safe as they are and as much cash as they have, As long as it stays like a relatively trivial amount of the balance sheet, I'm okay with that. But I don't want them to use this windfall as a result of an unprecedented interest rates environment to start like speculating on the market.
Yes.
So as long as it stays there, I'm okay. It's nice that they've shored up a bunch of profit, and that just means more robust reserves, etc. But maybe just don't become Michael Saylor, and we'll all be okay.
Yeah, I think in general, you do have a point. Like, I think as long as it's low, like a low percentage, it's okay. But I do agree with you that it's kind of nice when, like, if they hold stuff that isn't crypto, because if crypto melts down, like we've done a million times, and they actually have to start, like, which they don't, right? If they're fully collateralized, they don't have any of that problem. So as long as they don't start gambling, it's okay. But if something happens to crypto, you would like them to not sell crypto, because that's always like when it's the same with Luna, right? We talked about this back in the day before it blew up. We're like, well, what if the market goes down and they actually have to start selling? Then people obviously are going to front run then on their sells, and it's going to be this death spiral where prices go lower, lower, lower,
Yes.
lower, and they have less and less money, and the hole gets bigger and bigger and bigger.
And if they have to sell, the conditions are already bad, which means the liquidity is already bad. The market impact is going to be bigger. Like
Yes.
it's a mess. So we'll keep an eye on this. They've come a long way from the uncollateralized random Polish 300 millions frozen. You remember all that stuff? New
Yeah,
York
yeah.
Attorney General, etc. But just don't gamble on the price of crypto, or at least if you're going to do it, make sure it's not an important part of your balance sheet. That'd be very welcome.
Yeah. But I'd be shocked, honestly. I think
Same,
they went
yeah,
through so much shit.
exactly.
It's actually, and we talked about this a while ago, like a year or something ago, where I was like, the stablecoin I trust the most is Tether, and we were talking about, yeah, but USDC and everything. It's quite funny at the end of the day, like it's the one that had the least kind of amount of shit happen to it. The biggest FUD, but like what happened to it in the last years, it's much less severe than on other coins.
All bark, no bite.
Yeah, but I mean, there was legit criticism for a long time. I think those people that are still going after it are mostly just doing it out of spite because they were like, they might have been right at the time, but nothing happened, and now they kind of feel like they spent so much time already. It's like a sunk cost fallacy in some way. I think like I'd be shocked if anything happened to Tether. I don't think it is like a gamble worth taking. Like I've seen people speculate on the failure of Tether, and I think it's stupid. Because at the end of the day, I think at this point, and this is one that I hate to admit, but I think Tether is too big to fail in crypto now. If it does fail, basically all the liquidity is gone.
Yeah, I
And
love how we've sort of in crypto language we've redefined too big to fail, where it doesn't mean like the institution is just such a core part that it can't fail. It means, yeah, it still can fail, but what's the point of speculating, because we'd all be dead anyway. That's what too
yes.
big to fail means in crypto terms, and it's just become
Yep.
too large that you can't entertain that idea because the nuclear wasteland and the fallout would be too large. We're over an hour and a half now, so the last couple I'll do. Biden ties, we can go through these quickly. Biden ties Republicans to wealthy crypto investors in budget battle. Again, politicization of crypto, even though it's regulated up the wazoo to the point that it's pushing out companies and taxed pretty aggressively. And crypto tax avoidance in general, if you're using a sort of public blockchain, and exchanges pretty much being harsher than ever before on US users and requiring KYC everywhere. It's just, I think that the time for that argument is not now, maybe in the past, but not now. And also I think to the US, it's just going to be a net loss, making an enemy out of those people, as we've seen with USDC dominance and the mind drain, as you mentioned. I think all of that is shitty. But hey, anything for politics, right?
Yeah.
And it's a nice archetype to go after, like, oh, wealthy crypto gambling, not adding any value to society, Miami podcast bro. These aren't not the backbone of the middle class, right? So fair enough, easy to make a bogeyman out of these people. Ex Coinbase product manager handed 2-year prison term for insider trading. Do you remember this case about?
Yep, I do.
Yeah. Well, he got a 2-year prison case. Nate Chastain from OpenSea also, I don't know if he's in jail or not, but he was certainly charged and looks like he's fucked. So I guess the lesson there, Don, a shocking one, is if you work for at some point, either in the future or now, a tightly regulated sort of public-facing company, and you're in a position of power, don't insider trade, because I mean, it happens. You can even see it with like listings on exchanges, etc., like volume picking up elsewhere, etc. But there are so many gray area ways to make money in crypto that maybe like outright crime shouldn't be top of your list. But yeah, what do you think?
I mean, yeah, it's so stupid. He didn't
So
even make
stupid.
much money.
He didn't know.
Like,
He made like yeah.
and the thing is, like, I don't understand these people, right? Because why do illegal stuff that's gonna end you? Like, what's the worst case, right? What's the risk? It's going to jail, and that really fucking sucks, right? And what's the reward? It's a bunch of money, which cool, but you can make money in crypto other ways. Like, I really don't understand.
Like you work at Coinbase, you're clearly good at something, right? Like
yes, and they, I mean, it's not like they're getting paid little, right? Like this was a marginal part of his paycheck. So I'm just kind of like, as a trader, I'm thinking like, what's the risk to reward? Like, if you have like $0 and you have a way to make 10 million and you risk going to jail for 5 years, maybe that makes sense, right? I mean, I'm not saying you should do anything of that sort, but like that's a risk to reward where you could start thinking, right? But
not Don endorsing crime on Technical
no,
Roundup.
but like I don't understand how this makes any sense. Like you make a bunch of money already, a little bit more money is not gonna make the difference. So like just don't be stupid. And this is for everyone in crypto. With these meme coins that people make, right? They make a meme coin to rug people out of 50,000. And I'm like, that 50,000 isn't gonna change your life. And if it does, you could have easier ways to make that money anyway. Or like not easier, but like you have ways in crypto anyway. Why risk going to jail for it? Like I don't understand.
People get
It makes
swept up
no
in the
sense to
mania,
me.
I think. I think it's two things. They get swept up in the mania and they see everyone else doing it, so they assume someone else has kind of done the due diligence or the risk management calculation, and that, oh, well, they're not going to go after everyone, right? Or if they do, I'm not going to be top of the list or whatever. But yeah, I think like crypto Twitter is probably the worst I think it's been since maybe the ICO era in terms of like extractive shilling of garbage vaporware.
Horrendous.
It's awful. And you and I spoke about it like a week ago or a couple of weeks that like, oh, it's pretty bad right now with big accounts. But I made the mistake of clicking the follow, like the For You feed on Twitter.
Yes.
And I'm like, oh my God, these accounts who I've never heard of with 50, 70, 100, 200,000 followers. It's just like you scroll through, it's all fucking meme coins. And
Yep.
it's shocking, really.
And they've all rugged basically.
Yeah, of course. Even if they haven't rugged like outrightly, even just like performance-wise, they've rugged. But the guy tweeting them at you isn't losing any money. I'll tell you that much in most cases, anyway.
Yeah.
Final one, and this is really a state of the market. I would have expected to read this in the bull market, Don. Pepe Whale turns to ChatGPT created meme coin called Turbo. Like, this is a real headline with Bitcoin coming off from 30k resistance. Making the news. A whale who has earned $14.5 million trading Pepe has been buying Turbo since May 3rd, according to on-chain data analyzed by Look On-Chain. The trader is in the green, having bought 1.3 billion Turbo tokens for $977,000 that are now worth around $1.9 million. I wonder what that's going to be worth when he tries to sell. In any case, this is like really the state of the market. As much as we talked about like narratives and banking failures not catalyzing moves and how the stronger coins have been weak and Pepe topping on the day of the Binance listing, this really kind of tells you the story in one. That basically the risk-taking appetite is completely sort of unsupported by prices and the market. There's no correspondence between the two, at least at the moment. So maybe if things pick up and we get those reclaims and any of that positive stuff, you can start to make a different argument that, hey, meme coin type of speculation is usually a top signal, but now that the market looks strong, maybe it's an early trend forming signal. That's what that argument would have to look like, but there's just not enough evidence to support it at the moment. The prevailing case, absent those high time frame breakouts, is basically we got to resistance and everyone felt really bad for missing the move and got mega frothy, and they're just going to fucking pay for it with shitty volatility, chop, bleed, whatever.
Yep. And the thing is, like, if you go to 40, 45,000 on Bitcoin, you're going to make your 5x's on your shitty altcoin anyway, right? Like, if Bitcoin goes to 45 or like higher than that, I think your shitty link can go 3x to 5x easily, right? Your shitty whatever, like your shitty Dogecoin can do that. So why, like, I don't know why people kind of risk all of their money, all the ammunition in a market that is clearly still PvP, just so they can say, hey, I'm early. Because at the end of the day, like, you're basically risking everything to catch like an extra 50% on something at best, where you could just preserve your ammunition and then take the guaranteed like 5x instead, which I don't think anyone would be too upset about. But what you would be upset about is if you use all of the money that you have on something shit, you lose it all. We go up there to 45,000, and then the guaranteed 5x's roll in, and you don't have any money to play with. And I've seen that too many times. It's depressing every time when I see people that I've been kind of hanging out with on Twitter or on Discords that survived all of it, only to do one dumb move, give all of it back, and then the bull market starts. Like, it's happened too many times. I just want to warn about it, because I don't think it's necessarily a way to go.
Yeah, being undercapitalized for the most like profitable stage of the market through avoidable mistakes of your own is like the worst feeling ever. It's up there with like getting liquidated and all the other stuff. It's just really bad, because not only do you just lose on, like normally you just lose on that one trade and that money sucks, but you know in that case how many like future trades and X's you've lost out on just because of your lack of capital making stupid decisions.
Yep, exactly.
Cool. That's it from us. As always, Technical Round. I mean, leave a like on the video first and foremost for the sponsor plug. Subscribe to the channel if you haven't already. 50k was target 1. Target 2 is 100k, then we move to break even. I think that's how the trade works. But yeah, do all the YouTube stuff to support the show. Leave us a comment. We do read them and appreciate them. As always, brought to you by WooX. Links available in the description if you want to read a deep dive technical type of document, which basically takes the strongest FUD points, as strong as we can make them, and tries to address them in a decently balanced, evidence-based way. Check it out. And if you want to sign up to support the show, it's also there. You can get 0 fees for a couple of weeks if you sign up and deposit. That's all from us. Hope you enjoyed this longer episode, and we'll see you next week.